Very good evening to all of you and welcome to today's discussion on section 194R. Uh, Basically, we all know that yesterday CBDT came up with an additional guidance via circular number 18 of 2022. And section 194R has been recently introduced, which mandates taxpayers to deduct TDS on the benefits or perquisite given to Indian resident, and the benefits in perquisite should arise to that Indian resident during the course of business or profession. So now if an entrepreneur or if a business entity gives benefit or perquisite to another person, and that benefit or perquisite is arising because of the business or profession carried on by that another person, in such a case, the payer is required to deduct a TDS at the rate of 10% if it crosses the aggregate threshold, given in the section. And that threshold is 20,000. So if in aggregate one is paying more than 20,000, then TDS needs to be deducted. We got one circular on we got one circular on this. That was circular number 12, which came up with a guidance for the removal of difficulties. And then there were certain issues, which cropped up because of that circular or the guidance. And now we have circular number 18 to give us the additional guidance. Now, what this circular number 18 says, it first, let me share the screen. I think then we can have a discussion. Hope my screen is visible to all of you. So if you see, this is the circular we have, correct? Now, it was released yesterday, that is 13 September. Initially, it talks about very basic thing that this is a new section which mandates responsibility on the payer to deduct the TDS. Then in further says under what condition, but I think this line is very important. The benefit or perquisite may or may not be convertible into money, but should arise either from carrying out of business or from exercising a profession by such resident. So until and unless the benefit is arising either from carrying out of business or from exercising a profession, it will not fall within the ambit of section 194R. So when you are making a payment and you are a business entity, when you are making a payment to someone, or if your clients are making payment to someone, whether it qualifies, it may qualify as a benefit or it may qualify as a perquisite. But the question comes whether it is arising because of the business which that other entity is carried out, or is it arising because of the exercise of profession? If the answer is no, then in humble view, it will not fall under 194R in general. Now, then we have a specific guidance, which is to remove the difficulty. So if it is falling under that guidance, then certainly one needs to deduct the TDS. Now we have circular 12. You can go through the circular 12. We have done a detailed discussion on circular 12 that is available on my YouTube channel. You can go through the same. Now we are on circular 18. Let's see what circular 18 is saying. This para number 7 to my mind is very, very important. And I have often at various platforms highlighted and very categorically said that the purpose of section 194R is limited to the deduction of TDS. As far as taxability is concerned, there is no change. If you see section 28, there is no change. So one may be deducting the TDS under section 194R, but it is not necessary that it will become income of the recipient. So there may be a case that TDS is deducted under 194R. It is the TDS amount is getting reflected under 26AS, but the same amount is not becoming income of the recipient. It is a separate matter that if you are not treating the same as an income and filing the income tax return, you may receive a notice from the officer, asking you to justify that this is the amount appearing in 26AS. Let's say, 100 rupees is appearing, 100 ka they will say it is 10% TDS under 194R. Why we should not treat 1000 as your income? And this may also lead to income ischemic assessment, that everything may happen. But still it cannot change a fact that there may be a scenarios wherein the TDS is deducted under 194R, but it is still not an income of the recipient. This is what paragraph 7 very clearly saying. Now going to question number 1. Question number 1 says, refer question number 3 of the circular number 12 of 2022. If loan settlement waiver by a bank is to be treated as benefit, it would lead to hardship, as the bank would need to incur the additional cost of deduction in addition to the haircut that he has taken. Will section 194R of the Act in such a situation? Will section 194R of the Act apply in such a situation? So now let's go to the original question number 3. And was the original question number 3 was specifically on the loan settlement or waiver? And this has also given a rise to a question. Sir, if I am debiting, if I am booking a bad debt, or I am creating a provision for bad debt, whether I need to deduct TDS under section 194R. I think this is the terror of 194R, that even on a bad debts, businesses are thinking whether they need to deduct TDS or not on 194 under section 194R or not. So we'll have a discussion. But let's go to the original question, original question number 3, which is given in circular number 12. Let me share my screen. So this is question number 3. It says, is there any requirement to deduct TDS under section 194R of the Act when the benefit or perquisite is in the form of capital asset? I think the question was limited to capital asset, but somehow it got extended. I'm not sure why it got extended. Now what they are saying even if you are receiving a capital asset, it may fall under 194R. And then we have a judgment wherein they are saying the amount representing principal loan waived by a bank under one-time settlement scheme would constitute income falling under section 28(4), relating to the value of any benefit or perquisite arising from business or exercise of the profession. This was the judgment. So we have a counter judgment from the apex court in the case of Mahindra that it cannot be in the form of cash. It needs to be in the form of, kind. Then only it will fall under 28(4). And that's the reason they have clearly written the paragraph 7 that TDS may be deducted, but it may not fall under 194R. So now in this situation, the bank has gone to the department to clarify that you have given this example. Do we need to deduct TDS on one-time loan settlement? To that, they have responded that you are not required to deduct the TDS. They are specifically excluding the same. So what they're saying, it is true that waiver of settlement of loan by the bank may be an income to the person who had taken the loan. This they agree. It is also true that subjecting such transaction to tax under section 194R of the Act would put extra cost on such bank. Now, first of all, is it applicable only on bank? Now, let's say other than bank, if someone goes for a one-time settlement, then what will happen? Because this section clearly gives relief to the banks. It says, as this would require payment of tax by the director in addition to him taking a haircut already. Hence, to remove difficulty, it is hereby clarified that one-time loan settlement with borrower or waiver of loan granted on reaching settlement with the borrowers by the following would not be subjected to tax reduction at source under section 194R. And then they give specific exclusions where this benefit or this question will apply. And basically they are excluding all type of banks, whether financial institutions, scheduled banks, cooperative banks, state financial corporations, state industrial investment. So all these are excluded. But the question comes, and further it says, stated earlier, this clarification is only for the purpose of section 194R of the Act. The treatment of such settlement waiver in the hands of person who had got benefited by such waiver would not be impacted by this clarification. So what will happen to private loan settlers, whether they need to deduct TDS or not? Now, let's say you are not falling under any of these categories. What to do in such a case? Then I think the view is slightly divided. Certainly the conservative view is because this is applicable, the exclusion is given specifically for banks, and if the specified institutions, and if you are not among those specified institutions, then you should deduct the TDS and deposit with the government. But you may also, because see, the reason for exclusion is that as this would require payment of tax by the deductor in addition to him taking a haircut already. As the reason is very well defined, and the reason is, that it will put an additional burden on the payer or on the person who has given the loan. And because of the loan giving, now if first of all he is entering into settlement, he will not get his money. Then if you want him to deduct the TDS and deposit with the government, then there would be an additional problem that he needs to again shell out 10% TDS. So that is the basic reason for which banks are excluded. And why only banks are excluded? Because the question, if you go to the question, they are saying if a loan settlement waiver by a bank to be treated as benefit or perquisite, it will lead to hardship as the bank would need to incur additional costs. Because this question was specifically for bank. Maybe the banks have only approached. Maybe the industry, normal industry people, normal companies, they have not approached the government regarding this loan waiver or loan settlement. So the answer is with regard to bank, but in my humble view, I feel there may be, it may be slightly aggressive view. But if you are into private, if you are a private company, and let's say if you are settling the loan, if you are not among the specified institution, I think you can take a benefit of this question number 1 or answer to this question number 1. Now the next point comes whether bad debt, if I'm booking bad debt, then whether I need to deduct the TDS or not. In my humble view, see, bad debt is something which you do not provide to others. You book bad debt in your books. Whereas if you read the language of a section, it says benefit or perquisite provided. So are you providing the bad debt to the other person? No. You are not receiving the money, or you feel that your debtor has gone bad, the credit worthiness of the debtor has gone bad, and you are booking the bad debts in your book. So you are not giving any benefit or perquisite by booking the bad debts in your books. If tomorrow that guy comes up and says, hey, look, I want to pay you the money. So what will happen? You have all the rights to get that money back. But as far as settlements are concerned, somewhere you are surrendering your right. That settlement may be full settlement, that settlement may be the partial settlement. Somewhere you are surrendering your right. And now, once the settlement is done, let's say the full settlement is done or a partial settlement is done, the other person will not pay you, and he will pay as per the settlement document or what you have settled. Whereas bad debt is totally different. Bad debt is, you believe that you will not going to get your money back. You have requested that person, you have, issued emails, you have written letters to that person, and you feel you will not going to receive your money back. And that's why, following the accounting concept, following that, the debtor has gone bad, you are booking a bad debt. So in my humble view, bad debt should not be compared with settlements. And if you are booking a bad debt, then it will not attract section 194R in my humble view. Now moving on. Welcome, Saria sir. Now moving on to another question. I hope I'm clear on this. Any question on point number 1, which we discussed, bed dates and settlement? Okay. Now let me go to question number 2. It says, refer question number 7 of the circular number 12 of 2002. If under the terms of the agreement, the expenses incurred by the service provider is the cost of service recipient, and such cost is reimbursed by the service recipient to the service provider, how it is benefit perquisite if the bill is not in the name of service recipient? I think they have not changed their view. Whatever the view they have given in question number 7, it still holds true. Basically, what they are saying that, let's say if I am a chartered accountant, and if I am visiting at a client place for rendering the service, let's say there is a reimbursement bill, maybe travel, maybe hotel. If that bill is on my name, on the name of the service provider, in such a case, the TDS should be deducted. But whereas if the bill is on the name of the service recipient, that is my client, and I am paying on behalf of the client, or even if the client is paying, then there is no requirement of TDS. This is what question number 7 says. I think they have further substantiated this, that in case of pure agent, if the conditions of pure agents are met, they have again linked it to the GST. But at the end of the day, what they're saying, if the expenses incurred by the service provider, the bill in relation to the expenses incurred by the service provider is on the name of service recipient, then TDS is not required to be deducted. But if the bill is on the name of the service provider, then certainly TDS, the service recipient is required to deduct the TDS. Then there is a related question number 7, question number 3. Now people have raised an issue that, being a client, let's say if I am already deducting a TDS under section 194J on the entire amount, let's say the fee amount is, let's say, 10,000 rupee, and the reimbursement amount is, let's say, 1,000 rupee, or let's take a wider figure. Let's say the fee amount is 2 lakh rupees and the reimbursement amount is 25,000, and the total bill is of 2,25,000. So if I am already deducting a TDS on the entire amount, that is 2,25,000 under section 194J, would I need to deduct again TDS under section 194R, or whether I need to deduct TDS under 194J only on the fee amount, and on reimbursement I need to deduct TDS under section 194R? So question number 3 very clearly specifies that in this case 194J would be applicable. One needs to deduct TDS under section 194J and not under 194R. So on the entire amount, that is 2,25,000, TDS would be deducted under 194J. This is what it is saying. Hence, there is no requirement, there is no further benefit perquisite which requires tax deduction under section 194R of the Act. Now we are on question number 4. It says, refer question number 8 of the circular number 12 of 2022. If there is a dealer conference to educate dealers about the products of the company, is there a requirement that all dealers must be invited in the conference? The answer is no. You can invite limited dealers in the conference. You are not required to invite all the dealers. What if dealers arrive one day before and leave one day after? Again, to this, they are very specifically said that if they are arriving one day before and one day after, it will not tantamount to benefit. We raised this issue that not, let's say we took an example that, the conference is happening in Goa or Cochin and people needs to travel from Delhi. So they will not travel in the morning at 4 o'clock or 6 a.m. So you might need to call your dealers one day before, and the conference may end at night, maybe at 6 o'clock or 8 o'clock, and there is no flight from the conference location to the home location. So I think in order to take care of that, they have given one day leeway, both, before the start of conference and after the start of conference. I think now this is very damaging. The point number 3, how to identify benefits against individual dealers in a group activity. So question was raised that, if my group is going, if my dealers are growing and, I'm holding a conference, wherein, let's say, hundreds of dealers have joined the conference, and there is some benefit, let's say we have gone on a leisure trip, there could be certain benefits which I am not able to allocate or appropriate to each individual dealer, but I know this is the total benefit, total amount of expense I have incurred. So how to deduct TDS on that when I'm not able to identify X benefit given to each dealer? So in such a case, what they are saying, so they are not giving any relief. They are saying in such a case, if you are not claiming that expense, then you are not required to deduct the TDS. See what it is saying, in order to remove this practical difficulties, it is clarified that if benefit perquisite is provided in group activity in a manner that is difficult to match such benefit perquisite to each participant using reasonable allocation key, the benefit perquisite provider may, at his option, not claim the expense, representing such benefit or perquisite as deductible expenditure for calculating his total income. Now, this is that expense on which you might have already deducted the TDS and deposited with the government. Correct? Now, let's say I have taken a hotel on rent for my dealers, and I am not able to, or some catering service, and I've already deducted the TDS on catering service and hotel and deposited to the government. In general, that expense would be allowed to me under the income tax. Now, what they are saying, if you feel out of this amount, let's say some portion belongs, some portion is, can be classified as benefit or perquisite, which you have given to your dealers. Let's say, 10% on an ad hoc basis, let's say, not 10%, let's say 1 lakh of the amount represent, which you have given to the dealers as a benefit or perquisite. Now, but you cannot say, okay, Mr. X ko we have given a 5,000 benefit, Mr. Y ko we have given a 25,000 benefit. That is something which you are not able to do in the computation. So now, if you will disallow, if you yourself do not claim 1 lakh as an expenditure in your books while computing your income tax return, then 194R is not applicable on you. But then it means, instead of 10%, you are taking a hit of entire 30% or whatever your tax rate is. So I think it is a tough task, and the businesses needs to be very careful while incurring a expenditure, and they must have proper records, proper books to justify the appropriateness or the allocation of expense that they have done to the dealers. And if they feel it is tough, I think then the cost is huge. If you are not claiming that an expenditure, I think the cost is huge on the dealers. Further, let's say if you have not claimed that expense, will your dealers get any relief? I don't think so that dealers will get any relief. Rather, apparently during the assessment, what will happen if I have not claimed an expenditure, if assessing officer comes to know that this is the amount of expenditure which company has not claimed as an expense, because it is a benefit or perquisite to the dealers, which the company was not able to identify. Now, he may open income escaping assessment of dealers. He will say, you went on to conference, this was the benefit given by the company, you have not disclosed it in your return. So officer may himself come up with some appropriation or some allocation. He may divide the total amount of expense disallowed by the company, divided by the number of dealers attended the conference, and wherever the amount is, it is not required that the amount should be more than 20,000. Even if the amount is, let's say 5,000, he may give the notice that this income is escaping the assessment. So that may very well happen. It may not happen for a small amount, but law does not stop officer to issue you the notice. Now, if the amount is huge, if let's say the amount disallowed runs in crores, let's say the company has disallowed 1 crore because of the business expenditure, the company felt we are already into losses. What will, it is better to disallow. There are many startups, there are many companies who are into losses, they are incurring a lot of expenditure. on marketing, on pampering their distributors, to motivate their distributors. And today, if they feel let's disallow this 1 crore rupee of expense, so it will not going to give relief to the distributors in my humble opinion. So it may happen that 1 crore divided by 100, so 1 lakh is the income which dealers have not disclosed in their return. So in my humble view, the companies who are involved in giving benefits to dealer via conference or via another mechanism, they must come out, they must have the proper documentation, they should deduct TDS under 194R. I think that would be the better approach in my humble view. Now we have question number 5. I think again this was the issue raised in many programs, that if the car is given as a gift, then whether Mr. B, let's say company A, has given a car to car dealer B, so and on which TDS is deducted under 194R. So whether dealer would be able to claim the benefit of depreciation, the answer is yes. They say if other conditions for claiming depreciations are met, then you can certainly claim the benefit of depreciation. They further clarified that 194R is not applicable on embassies, high commissions, and we are on last question number 7. So question was whether issuance of bonus shares, right share is a benefit or perquisite if issued by a company in which the public are substantially interested as defined in clause 18 of section 2 of the act, whether tax is required to be deducted under section 194R. To this they have said no, it is not required. Interestingly, if you read question number 7, nowhere they have admitted that this would be the income or benefit. Now, before I discuss question number 7, let's go back to question number 2, I think. Just give me a minute. See, question number 1, sorry. In question number 1, they are saying it is true that waiver or settlement of loan by the bank may be an income to the person who had taken the loan. Now, if I come to question number 7, they are saying in case of bonus shares which are issued to all shareholder by a company, the public are substantially interested as defined in clause 18 of section 2 of the act, it has been represented that does not result in any benefit to the shareholder as the overall value and ownership of their holding does not change. Further, cost of acquisition of bonus share is taken as nil for capital gain computation. It is clarified that the tax under 194 of the act is not required to be deducted. If you read this, you will find there is nowhere, they are saying that the issuance of bonus share is the income or benefit in the hands of the recipient. And we can apply the same logic in case of the private companies, that if it is not income in the hands of the recipient, in such a case, section 194R would not be applicable. So this was all given in the guidance, additional guidance. If you have any question for me with regard to circular number 18 of 2002 or on section 194R, we can quickly discuss the same. You may unmute yourself and raise the question. Okay, being there are no question, let me take exit from it. Many thanks to all of you for joining. This video would be available on the YouTube. If you're watching on a YouTube, feel free to like and share it with your friends.